Today we're building a complete trading strategy using a very simple TradingView indicator to spot short-term reversals. We're gonna check out the indicator used, see how they look on the chart, and finally, just to be sure our strategy works, we're gonna backtest it over 4,000 times. Do you think that's enough? Let's jump straight into it! The core of our strategy is the moving average shift. This indicator combines classic moving averages with a custom oscillator to visualize trend strength and price deviation. It plots colored diamonds when a MA shift oscillator crosses a user-defined threshold, signaling potential mean reversal points. Here is how it looks on the chart. You'll see these colored diamonds appearing exactly at the moments where the price is extended and likely to reverse. These are our main entry signals. Now, let's add some confirmations to our strategy to improve our signal quality. First, the triple exponential moving average, to only trade in direction of the trend. We have set a length of 30 as source close. Since we are looking for reversal, we'll open long positions when the price is above the moving average, indicating strength in the trend. This is a clear example where we will take a long position, while in these other examples we wouldn't, because the price was still in a bearish trend. Conversely, we'll open short positions when the price is below the moving average, signaling that a downtrend could potentially be started. This will be a bad signal, but this one will be a wonderful reversal point, as you can see here. Then, the other confirmation is based on the historical volatility indicator. I've taken from the volatility pack by TradingView Pro, which is a pack that contains the most used volatility indicator. But if you want, you can always search in the indicator section historical volatility and select this first one. We're gonna use this indicator in this way. Whenever the historical line is closer to the 10 value, that means higher volatility. That's why we're gonna open long and short position only when the historical line is greater than the 4 value, which is exactly this line right here. This volatility confirmation is really useful to avoid low volatility periods and help us avoid getting stuck in our trades. Okay, now that we have defined all the rules, can you imagine manually finding all the trades that matches these 3 rules? It will be a huge waste of time. To avoid this, we'll use the Strategy Builder, the smarter tool to create trading strategies without running a single line of code. It saves you tons of time and you can visually combine entries, filters, exits, and more. I already configured it in less than 1 minute. I just set here the MA shift up, the MA shift down, here the moving average for both signal, price greater, price lesser, the volatility pack, here the historical volatility that is greater than 4. And that's pretty much all for entries and filters. Here we have 2 clear examples of long and short positions. We have a blue diamond, buy signal from the MA shift oscillator, the price is above our moving average, and the historical volatility is greater than 4 value. While for short positions, we have sell signal from the MA shift, the price is below our moving average, while the historical volatility is greater than 4 value. Absolutely amazing, guys. Now, let's talk about the exit rules. We're gonna set the stop loss based on the higher highs and lower lows. We're gonna look back 15 candles to set our lower low for long position and higher high for short position, while our take profit is based on a risk reward of 1.5. As you can see, here we have our long position, we look back 15 candles, and this is exactly our stop loss level. While for short, if we look back 15 candles, we'll see that this is the highest high, and we'll place our stop loss at that level. For the take profit, we multiply the stop loss distance by 1.5, and the same is for short position. That's fantastic! Now, considering I already done a backtest over 4,000 times, we're gonna go straight into the backtest results. Here we have some of the best backtest results based on our strategy. And if you're wondering how I generated this super useful performance spreadsheet, the answer is simple. I'm using a free Chrome extension that works with any TradingView strategies. It exports your full backtest results in just 1 click. You can grab it for free in our Discord, the link is down in the description. I want to point out that these backtest results are based on $10,000 for initial capital. I have applied a cost simulation of 0.06% for the commission. We are using fixed position size of $10,000 and 1x leverage, so basically no leverage is applied. We're gonna analyze the top performing one asset, which as you can see has generated an astonishing equity line. We have 200% net profit, 16 max drawdown, a low value compared to the net profit. In fact, we have a net profit / drawdown of 8.73, which is a pretty high value. 75 total close trades, which isn't a high value, but it's a decent one. 56% win rate, which isn't a high value as well, considering we are using a risk-reward of 1.5. But if we check here the average risk-reward, which is calculating by dividing the average win for the average loss, is slightly more, which is 1.74. And this happens because we don't have a fixed stop-loss distance, but it can vary based on the lowest low or the higher high. And since the take profit is also variable because it depends on the stop-loss distance, we can have a slight different risk-reward. I want to specify this because I don't want to get you confused between this risk-reward and this other risk-reward, which has the same name, but they are calculated in a different way. Then we can see the max win row, which is 6, and the max loss row, 4. The expectancy is 0.53, which is a high value, absolutely good. Max win trade 23.55%, while max loss trade 13%. By looking at the monthly table, nothing so exciting. We have 4 flat months, the strategy is flat, it didn't do anything, while we have 11 losing months, and the other are all profitable. Then by checking the buy and hold equity, we absolutely outperform this metric, even though we are not using any leverage to this strategy. Next, by checking the distribution between longs and shorts, we can certainly state that we did the majority of the profits from the short side, which is a double of the long side. Now, to summarize, what are the pros of this backtest? Certainly we can mention the equity shape, the high net profit/drawdown ratio, and the expectancy value. There could be room for improvement, of course, because I didn't do any optimization at all. If you like this strategy, you can get it in our Premium Strategies channel on Discord. By accessing the Premium Indicators channel, you also gain access to the Strategy Builder. If you enjoyed this video, consider watching this other video right here.